These are safest ways to invest 500K. That's like $5,000 or slightly less than that. Oh, by the way, this is still also the safest ways to invest any amount out there, whether it's a million, 10, 20, whatever it is. So this is that video that you ought to watch because you guys keep on asking me this question. Hey, Joseph, I have some cash here and it's the only money I want. And I don't want to start a business as of now. How can I keep this money not only safe, but also have invested it, it's making some cash? The safest ways. And by the way, I don't want you to confuse some terms here. When I say the safest ways, in this regard, I'm referring to the risks involved. Therefore, these are low risk investments. Are we together? That also means that whoever gravitates towards the low risk investments, we call them a conservative investor. Okay, these are people who will say that they are risk averse. You know, there are these people who be like, hey, no, I would rather even get 4%. And that's why you find people going to a bank and fixing their money. You go there and get yourself either a negotiated fixed deposit or just a normal fixed deposit so that you don't want to lose anything. They are so skeptical and something like that. So anyway, this is that video for you guys. And in case you're watching this video and you have not subscribed, go ahead and subscribe and make sure that you like the video and leave a comment on the comment section. Let's get on the business now. The safest way to invest this amount of money, first thing, you have to look for the areas where the risk involved are way less. It's only that we can't say that there are zero risks, okay? Way less. And of course, that one is lending government your cash. The simple start. Lending government your cash. For example, if you were to study the structure of a government, it will take years and years, or forever it will never happen, for the government to reach a point whereby it collapses and it defaults everything. And if it defaults, then what happens is that it delays, but later you're gonna get your cash. And this is where I'm talking about government securities. How do you invest on government securities? Such examples are T-bonds. Right now, as we speak, I'm making this video on the 1st, or rather not the 1st, yes, the 2nd of August. And these T-bonds, we have two ones, or we have two types of T-bonds right now if you're watching this from Kenya. We have an IFB, that is infrastructure bond, which is usually the tax-free, and we have two of them, okay? So government bonds are the safest areas where you can put your money. But now be advised, if you go the government bonds way, these are long-term way of investing. We have one that is going for 7.5 years and we have the one that going for 14 years. So if you are comfortable, quote unquote, fixing that money for that duration, then this is a place that you can actually go and do something. Right now, as you speak as well, we also have a T-bills. This is a sister to T-bond. And what happens with the T-bills is that they are short-term period of time, way of lending government your cash. And these are very, by the way, let me tell you one secret why I'm saying these are the safest ways of investing. Of course, I'm going to share others. You see, even that money that you invest, or rather that money that you take to a bank, you adjust a deposit. You can't keep money under your mattresses. That money that you take to a bank, this is where they usually invest, precisely on the bonds. Okay, or mostly on the bills, because bills are short term. Okay, and of course, banks need to be liquid because they need to service those guys who are showing up to the ATMs, those people who are withdrawing, whether over the counter or whatever the formation it is. So this is majorly where the banks invest their money, and of course they can have some spillovers to the real estate and what have you, but mostly people's deposit, this is where they usually invest their money. Are we together? Now, another area that is very safe, secured, reliable, and predictable, almost assuring you what we call the the capital preservation, is what we call the mutual fund. And when I say mutual fund precisely here, I mean MMF, money market fund. And that's why you heard, like I've been talking about that like a million times. Oh, you know what? Yeah, you can because this is like an equivalent to a bank account, where you can put your money, withdraw it at any given time. Money is earning you interest, and it's every day. So you cumulatively get that money, and of course that is a cash that you can also be able to use it, for example, either for an emergency fund, either for a sinking fund, either for a long term. So because this investment is actually open-ended, it does not have a defined period of time, unlike these two. The first two, which is the bills and bonds, they have a defined period of time. When you go the bills way, you either go for 91 days, you either go for 182 days or 364 days. For this one, either you go from 2 years all the way to 30 years in between that line. But for MMF, that is actually open, and you can also put your money out there and you can be able to do something. Let me share with you another thing or another area that is a low risk investment. That is FIF. FIF is another investment which is under the mutual funds. It's called the is it under the mutual funds or is it a unit trust? Now, FIF is called a fixed investment fund. Fixed investment fund. This is where now it's like a sister to a money market fund, but slightly different. Why is it slightly different? If you were to do anatomy or if you were to do a dissection of money market fund and understand what it is, they usually invest in 3 areas, and those 3 areas are none other than commercial paper. This is the paper or a document fronted by companies when they want to borrow. FDS, that is fixed deposit. And then the last area where they usually invest is T-bills. But then you find if you invest with a, see now, in most cases, okay, you can say call deposit and what have you. But when you come to the fixed deposit or other fixed investment fund, they exceed these 3. They can even add bonds here. You know, they can also explore some other investments. That's why they have chances of making a little bit more with FIF compared to a money market fund. Why? Because by law in Kenya, the money market fund company ought not to invest something beyond 18 months. They are not supposed to invest in anything that exceeds 18 months. And of course, you know, bonds start from 2 years. And this one is slightly less than 2 years. Of course, it means that the money meant for the money market fund investment cannot be invested in bonds. But welcome. I hope we have some companies that we do invest there, but it depends on how the company is structured and how they safeguard the people's money and something like that, okay? Because I heard that when it comes to you investing in a money market fund, they usually keep aside around 40% of your money accessible to you. The rest is invested. Because you see, money market fund, due to its liquidity in nature, people can withdraw money any given moment, can just withdraw their money any given moment. So what they do is that they usually keep that money in a liquid, in certain fraction of it, which I was told is around 40%. Then the 60% is what they leverage on. Let's say, for example, you put your 6,000 or 10,000 there, then 4,000 you can access. I don't mean that you can't access that. You can access all of it, but they usually play with those numbers so that they keep you liquid. At the same time, they have invested some other fraction of money because, of course, there are companies in business and such kind of thing. Well, another area that I would as well recommend that you invest that are very safe are called call deposit. Well, these ones may not earn you quite a huge cash of money, but again, it's an area where you can deposit. And funny thing is that if you show up to any banks in Kenya and you ask them about call deposit, they will, it's very hard for them to tell you there because they don't want you to put your money here. You know, this is an area where you can benefit. I think these guys, when they go for training or to become a banker, they try to make sure that you never get anything that you benefit. For sure. You know, I've studied that, the behaviors of the banks. I showed up to a bank and asked about the call deposits. Nobody was telling me. They were just proposing me the funny things I don't know. I don't want to mention them because if I mention it, you definitely know what bank I'm talking about, you know, and I don't want to do that. So, but the thing is, I showed up there and I was asking them, hey, I want to invest some, I want to open a call deposit. You know, they were taking me rounds. Oh, call deposit is the same as fixed deposit. And then I was like, then why, if the same, then why two different names? We can just scrap that call deposit name and call it, you know, fixed deposit, or we can just scrap the fixed deposit and call it call deposit. Then I studied the psychology of the guy and I understood. Actually, I told him, you know what? I know how you've been trained. You know, you want to maximize the returns for your company. And I totally understand, but the fact remains that isn't fair, because even if I invest in this call deposit, you as a bank, you're getting cash, I'm getting cash, so we're all benefiting. But then if you go the way you want, it means you are benefiting more than I do. I understand it is you taking the risk, but it's my money being risked. That is a fact. So anyway, the point remains to be, banks are never your friends. They will never be your friends. They are there to make money as much as they can. So it is you to be smart, to know where and how to invest. But if you can get a call deposit, I'm telling you, it's a very sweet and amazing way of investing. Why? It's just, you see, how can I say this? It's a deposit that can be called at any given moment. And then that money is meant, or rather is put somewhere whereby it is generating you some cash. And then, of course, this is just like a normal bank account, but now giving you a high yield returns. With that regard, then I would say this is a place to exactly be. So if you gravitate towards that one, or the ones that I've actually discussed there, and you can be able to do something. I've actually, intentionally or deliberately left the fixed deposit because it's not that decent if I was to talk about it. But anyway, guys, I've shared with you a couple of examples, like 5 of them. Fixed deposit, or rather the treasury bonds, treasury bills, the money market fund is there, the fixed investment fund is there, and the call deposit are right there. So it is you to make a decision which one you find it appropriate and which one would you like to invest and keep your cash there. Remember one thing, all these are conservative way of investing. They don't earn you quite huge returns, but what they assure you is that your money is safe and secured. And at what time would you explore these areas? One, when you are a conservative investor, you don't want to subject your money to a little bit of high risks, because we have such personalities. And this is whereby when you contact me, by the way, that is my number in case you need my services, I have first to run you some few tests to see which kind of an investor are you. So when I realize you are more of a conservative investor, then there is where I will actually direct you. But then I realize somebody else is a bit of a high risk taker, then we can be able to explore such other areas such as unit, what do you call them? Oh my goodness, I forgot that name. You can also be able to invest in something like equity fund. You can go the fixed deposit, not fixed deposit rate, but the special funds. We can also explore some other areas like stocks. We can go the index fund way. Although index fund can actually even fall under the safest ways of investment because of its nature. By the way, even if you invest on some company, for example, in Kenya we have like 2 index funds that are quite popular. Not two, we have several, but for me I gravitate towards 2. We have the new gold ETF offered by the Absa Bank, and then we have a new one by the Satrix or something like that, has actually been listed, and you can be able to explore. It actually monitors, bigger global ETFs out there, and you can also do something about it. So ETFs are kind of they fall under this low risk, and they actually have a very good returns. This is good. Just in case you need my services, that's my number. Shoot me a text or a call on my WhatsApp. That's not business for now. It's a goodbye and see you in the next one.